That now is still a very good time to invest, but it's important to understand the difficulty of the nuances in the market. But if you specialize, refine, and adjust, then you're well placed. So we're now going to continue the theme as we have a bit of changeover in terms of people moving in and out. We're going to continue to focus on building an investment case for Europe. And I'm very pleased to invite Patricia Pascal-Ramsey, partner and COO of Valantra, to come up and moderate the session. Patricia.
Hello and good morning to everyone. Welcome to our panel, Building an Investment Case for Europe. This is Patricia Pascal-Ramsey. I'm the partner and CEO of Valantra. For those of you who don't know us, Valantra is a global asset management and financial services firm operating globally with more than 600 professionals. So in Europe, we are today experiencing a backdrop of economic turbulence. We all know and hear about the energy crisis, the 40-year high inflation, still the aftermath of the pandemic hitting us. But however, we also have the largest ever amount of private capital available to be invested in Europe. So today we will look at how these economic factors and external factors will shape investment opportunities in the coming future. And we'll also look at how investors are thinking about technology, ecological transition and innovation as a way to manage their portfolios and look into new investment themes. So to talk about this, I'm joined today by Alain Godard, CEO of the European Investment Fund, and George Osborne, who's founding partner of 9 Years Capital. A quick introduction about our speakers today. So Alain, CEO of the European Investment Fund. Alain has been working for more than 30 years in Europe's institutional and financial world. He was very critical in building the European financial stability mechanism, and is now from the CEO position in the EIF building and promoting the thematic agenda of the European Union around innovation, social impact, and ecological transition, energy transition. George Osborne, founding partner of 9 Years Capital, former Chancellor of the Exchequer from 2010 to 2016. He was one of the longest-serving finance ministers in the UK, and from this position, he was instrumental in building the UK's global leading role in fintech, and also chaired the UK Cybersecurity National Committee. So let us start. First, Alain, to you. Against this economic backdrop that I was talking about, how do you see the opportunities for private capital investments in Europe?
Well, thank you, first of all, for inviting me today. The situation is obviously quite different from the one we have experienced over the last couple of years. Indeed, I mean, the global outlook, it's not the one that we have obviously experienced. We have now a war, I mean, in Europe. We have a high inflation rate, increase of interest rate, an energy crisis. Therefore, a lot of, let's say, I would say, negative outlook that may have obviously an impact on investment in general, and in particular on private equity and VC markets. So in this context, I would say that so far the European market has been quite resilient. We have seen it in the context of the COVID crisis, whereby, I mean, we reached actually record amounts, being in fundraising or in valuation. Today, we experience indeed something different. Also, it's difficult to quantify exactly the size and the amplitude of the impact on portfolios. I mean, the recent analysis and also a survey that we are doing at EIF with all our partners, actually about 700 partners, We see indeed signs of impact on exit, on valuation, obviously, but this is only signs at this moment. I don't see necessarily a long-term, let's say, effect. Also, nobody knows, and no one has a crystal ball today to predict how the conflict is going to develop. I mean, this morning we didn't get, let's say, very optimistic sign of good development from Russia. Therefore, there would be high uncertainties going forward, and this is what is reflected in our survey very, very clearly as one of the top preoccupations of our partners. Now, this being said, I wouldn't say that Europe is doing badly. On the opposite, I think we have very good fundamentals in Europe. We have notably a good dynamics in terms of innovation. But not only, I would like to say, maybe we would have the opportunity to talk later about that, but I see good development in terms of entrepreneurship overall. And at the end of the day, this is what counts very much, to count on people, most of the time young entrepreneurs, who have developed now their different attitude vis-à-vis doing business. And therefore, this is still obviously quite favorable, I mean, for the future. And maybe last word, I see also an opportunity, because we can see always fears in Europe and on our markets. We used to say in the past, and Georges would remember very well this expression, in French, which talk a lot about the Europe à petits pas, meaning from Jean Monnet, that Europe is progressing, but really slowly, by steps. But Europe is also progressing very much in times of crisis. And what we have observed recently with quite an extraordinary initiative when it comes to energy, security, defense, digital, this is something that I haven't seen personally for my last 30 years in career for European institutions, developing that much. So I'm quite optimistic. Also, the mood is obviously different, and we will not deny the situation as we observe it today. I see, nevertheless, quite a lot of, let's say, positive element into that challenging context.
Thank you. As an investor, George, how do you see investment opportunities in Europe?
Well, we haven't colluded, but I agree with a lot of the assessment that Alain has given. So I think when I was last in this building, which was 11 years ago, and France was hosting the G20 conference in this very building with the various leaders of the world. And at the time, there was an enormous frustration in Europe, including in the UK, that the tech scene that we saw in the United States and an emerging tech scene in other countries and other continents in the world was not being felt in Europe. And now here I am 11 years later as one of the founding partners, now a managing partner of 9 Yards Capital, and we're an early growth stage investing business based out of the United States. And we have largely invested in American businesses, but we are looking with increasing appetite at European businesses and at the European tech opportunities that weren't there 10 years ago. So I think if you rewind a year, just 1 year, there was a lot to be excited about. You know, the funding, the capital markets for tech were developing in Europe. The universities of Europe, historic, great, among the greatest in the world, had begun to be able to spin out companies and support them from their academic research. There was an appetite amongst retail investors for private markets, and people were beginning to find roots in. And those fundamentals, I think, are still in place. Now, obviously, as Alain says, we have a war on the continent of Europe. We have an energy shock that has been caused by that. We have the hangover from the end of COVID and the supply chain bottlenecks. We have inflation, not just here, but also in the world. So these are very real and immediate problems, and in the case of Ukraine, a tragic problem. But I think it's important, if you're investing, as we do at 9 Yards Capital, for the longer term, if you're trying to pick great companies that are going to be great companies, not just today, but in 5-10 years' time, that you have to see through some of these issues. And some of the investment cycles will get longer, some of the returns will be delayed, but the fundamentals that I think were creating a strong European ecosystem, are still there, and that excitement is still there if you go to places where this entrepreneurship is happening. So, there's lots of reasons to be pessimistic in the short term about the world, but if you're talking about the broader European, continental, and UK tech environment, I'm quite optimistic.
Okay, we will go into tech in a minute and speak about that. But before that, let us talk about energy. Alan, I think Europe has both the need and the opportunity to lead the transformation of our energy model. There is, I think, increased focus from governing bodies and investors to achieve the net zero goal. The EIF is looking to play a central role in that change, and as an example, we are partners in a transition energy fund, of which we are announcing today the final close. So can you tell us a little bit more about the central role that the EIF is looking to play in accelerating innovation in transforming our energy model?
Energy, obviously, and the energy transition is key for all of us, for Europe, obviously, in particular, in the context we reminded. Now, you will not be surprised, and this has started actually before the energy crisis, with the digital and energy priorities put into the Green Deal by the European Union. And therefore, we have designed programs at EU level who will put a lot of priorities indeed on the energy the transition and green transition in general. So it's not only the tech in relation to new energy, but it's also about energy savings and any kind of, let's say, transition that will help to save, but also to develop new capacities in Europe. So in the so-called InvestEU program that has been designed together with EF, the European Commission has put indeed a lot of money into this, and it would be one, if not our key priority for the next years to come. Our partners know that. I mean, we have communicated quite a lot on this so far, and the deal that we are making with a certain number of fund managers recently show the direction that we are taking. So it will be very important for us, and if we have at the end of the day to make some choices, clearly this aspect of greening the economy in general, energy-related tech development tool would be a key priority for us.
Thank you. So let us go into technology. I think the last 10 years have seen a partnership between public and private capital commitment into developing a wider and more consolidated ecosystem of technology scale-ups in Europe, particularly around the segments of cybersecurity, fintech, biotech, and artificial intelligence. So as valuations have corrected over the past 2 years, from the highs seen in the last 2 years, how do you think this increased opportunity should be played in Europe to be supporting these consolidated scale-ups?
An important role. I mean, first of all, indeed, I mean, you mentioned a scale-up, which is a key initiative that has been led under the French presidency of the European Union, with a signature in the 8th of February this year of a declaration supporting the emergence, indeed, of, let's say, to make it simple, the European Googles of tomorrow. 22 countries have supported this initiative, which is quite significant. And it's not a surprise, as we know, because today, 3/4 of our fast-growing company startups, innovative startups, are actually refinanced by US-based and Asian-based funds. So we are obviously in Europe welcoming this investment from the US and from Asia in general. But it is equally important to support ourselves in Europe, our companies, because you know that most of the time when you are refinanced at a later stage by, let's say, non-EU, non-European funds, there's a certain number of implications that comes with this. I'm not talking only about, let's say, the quotation that may be done elsewhere, and notably, obviously, the Nasdaq, but also some element of development that are needed, let's say, to internationalize the business of startups, but can be also developed from Europe. And in the context, let's say, in the global context of more sovereignty at European level, and that goes beyond the EU, obviously, it is important that we provide such a support. Clearly, some sectors maybe would be more advanced than others. I mean, we financed and the health sector, for example, and other sectors who are clearly, let's say, more developed than others. We don't put any priority on any particular sector. It's important to mention. What is important for Europe is to create, again, the champions of tomorrow. And therefore, we will be prepared to give more financing in this segment and the gap, actually, that we have observed in the growth stage of the financing.
Thank you. George, as a US-based, Silicon Valley-based investor, how do you see this opportunity?
Well, I guess where I would differ a little bit from Anna is I wouldn't worry too much if the money is coming from the United States, from American funds. I think it's great that European funds are developing and growing in scale, and the European venture ecosystem is there. For me, if you've got sovereignty issues around security or energy security, they're not really about where the financing comes. It's where the location of the company is and the IP is and so on. And I think the arrival of quite a lot of the kind of classic Sandhill Road VC funds into Europe now, setting up offices often in London and out there on the continent looking for opportunities, is actually a very good sign, because there's not necessarily the pressure on the company to relocate into the United States, which I think there was a generation ago. So people can build their business in Europe. Then, but the obstacles to building the company in Europe are, there to be removed by governments, whether it's the EU or the British government. So you've got to make sure that there's market access, that incumbents don't suffocate and prevent the arrival of new entrants, that the regulatory environment in, for example, financial services allows for innovation and isn't overly protective and defensive, and so it doesn't allow companies to grow and the markets aren't there in Europe, that cross-border trade is facilitated so that the full potential of the European continental market of many hundreds of millions of people is available to companies, that there's a good supply of skilled individuals who are able to move to individual European countries and bring their skills and talents with them, and the workforces that these companies need. I mean, all of these ingredients, the ecosystem, goes beyond the financing. The financing was to my mind, again, if you look back 10 years ago, the question was, there's no VC infrastructure in the UK or in Europe, and you had to go to America for it. I think that infrastructure is there. You can see it at this conference and how this conference has grown in recent years. The question then is, what are the other things that are required to allow, we don't have to talk about the Google of tomorrow. let's talk about where are the unicorns of tomorrow here in Europe. And they just need that ecosystem of, yes, access to capital, but access to talent, regulation that doesn't stifle new entrants, that stifles innovation, that protects incumbents, that actually delivers therefore a poor environment for consumers. All of these things are within the hands of national governments, the European Union, and regulators, and that's hard work. Sweeping away those obstacles is hard, painstaking work, and you see it for if you take fintech. Obviously regulators have very legitimate concerns around monetary stability, financial stability, consumer protection. But if those are your only concerns, then you'll never allow a new financial services company to be set up or a new bank to be established like a neobank. And getting that balance right of allowing that innovation and therefore allowing some companies not just to succeed, but some companies to not succeed is a real challenge for regulators. And I actually think Europe has, in some senses, a potential advantage over the US, because I think the US regulatory system is very sort of entrenched, and you have these very powerful regulators, and they report to different congressional committees, and it's quite difficult, even though I think actually this administration is trying to deliver a national strategy on things like fintech. In the US, it's harder to deliver, whereas actually European governments can have more control and more power, and the European Union can develop a more coherent policy. So there's an opportunity on the in Europe. And that's where, as I say, I'm less concerned where the money comes from. As I say, we're a US-based investing business, but we're looking for European opportunities. And I think that would hopefully be a good thing for our investors, but also a good thing for the European companies we invest in.
Thank you. So let's talk a little bit about new value creation drivers. So I was saying before, we have an unprecedented level of private capital in Europe, but at the same time, an increasingly higher expensive cost of capital with higher inflation and higher interest rates. So do you think that against this new scenario, investors will be more keen to put a stronger emphasis on value creation drivers such as technological change, energy efficiency, and to look at the productivity and efficiency gains that this innovation and technological change can bring to their portfolio companies? George?
Well, look, obviously the interest rate environment changes the calculus for a lot of investors, because fundamentally there are other opportunities to get returns. And the cost of money has changed. And that changes calculations about the cash flow models of these businesses. That's all statement of the obvious. So, there's clearly going to be a lot of these companies thinking hard about the efficiencies that they can make, the runway they've got of cash, how long it is before they have to go back to raise money, either in private markets or before they go public. I think there's going to be a delay. There already is a delay, and we've all seen it in our businesses. I just think it's quite important. If you look at our business, Ninos, we're not day-to-day traders in the capital markets looking to turn a buck every single day. We're looking for great companies that are being built over the medium to long term. And you have to be able to see through some of the noise whilst at the same time making sure that the companies we invest in are being sensible about how they conserve resources or how they spend the cash that they have. So yes, it changes things, but the job of the central bank is to be assessing the situation now and inflation over the next couple of years, and to keep try and bring inflation back on target. The job of the venture or early growth stage investor is to try and see where the world's going to be in 5 to 10 years' time.
Thank you. So let's talk about some of the specific niches in technology and investment in these niches. So fintech has been a very safe place for investment in Europe, but still remains a very competitive market. So how are European fintech businesses differentiating themselves from other competitors?
Well, I think there are sort of some. I mean, obviously, there's some fantastic fintech businesses in the United States, and some of the payments companies, are very impressive there and have brought their business here. I think there are sort of peculiarities of the European system that actually lend themselves to more innovation. I think, in the retail banking space, you've seen probably more innovation in the European continent than in the US. I come back to really the answer I gave earlier, which is, there are for all the opportunities of the US, I teach at Stanford a course, and there's, it's an incredibly exciting and impressive place to be. At the same time, sometimes the US regulatory system can be quite choking of innovation, and the incumbents in the US are very powerful, as we well know, and very effective at lobbying against change that might challenge their position. So, I think there are opportunities for all, but sometimes European governments and the European Union, in the case of the continent, there's more scope for direct action that would create a space for innovation. And certainly, when I was the Chancellor in the UK with Mark Carney, who was then the Governor of the Bank of England, we went out of our way to create a sandbox that would allow fintech innovation, that would mean the regulators wouldn't immediately crush anything new because there might be a risk at some point in the future. So we were always, of course, careful about consumer risk and financial stability risk, but you won't allow anything to grow if you are completely risk averse, and that's a hard mentality to get into the head of a regulator for good reasons. Your regulators are there to, trying to prevent calamity. But, I think that kind of innovation is something that Europe can lead the world in.
So are there any other tech niches, Alan, that you see particularly interesting in this new context?
We mentioned earlier the importance of greening the economy, energy-related the tech, and so on. So we can consider today, this thematic as a niche, but they will come necessarily mainstream in the future. I'm thinking also about a thematic that is obviously very, very much important at the moment, is what is related to security and cybersecurity. Not to talk about the defense, or also there's no taboo anymore around the defense technology. Most of that technology, by the way, being dual technology, so not uniquely used by defense. So these thematic will probably grow going forward, in view also of the availability of funds and programs that will be dedicated to these sectors. Health is going to continue to grow. Clearly, it has reached already quite a sizable amount over the last couple of years, obviously. Cybersecurity, we are talking about a steady 20% growth every year. So you see the trends there as well.
Thank you. So I'm conscious of time. We have 2 minutes left. Perhaps let's open up to the audience and see if anyone has any questions that they would like to put forward.
Thank you. Just one question. I agree with the Chancellor when you say that where finance comes from is not important, and the most important is for companies to find the competitive environment, the right education, regulations that help innovation. That is true. But where finance comes from is still important, because investors are not just capital providers. They're also shareholders. They set the strategy. They enforce a sustainable agenda. And we need that to happen now in Europe with European companies.
So I don't disagree. I just think the situation is much better than it was a decade ago. I think there's in this room, I'm sure, and certainly out there at the conference hall, there are now a host of European venture and growth investing businesses that didn't previously exist. A lot of the American funds have established permanent presences now in Europe, which wasn't the case even 3 or 4 years ago. So I think that kind of ecostructure is developing. I mean, I think there's a kind of general challenge for Europe, including the UK, to develop their capital markets in the way that and this is not just true in tech, for a growing US small to medium-sized business, there are just many more funding options than are available to a European small, medium-sized business, who will often go traditionally to the bank to get a bank loan. I mean, that has been the classic financing. So the development of European capital markets, including the infrastructure which you see on display here at this conference, I agree with you, is of kind of great importance to the European economy. I just personally don't, if we have a great European company that's getting money from an American venture fund, we shouldn't be too worried about that. And these days, I don't think there's the pressure to relocate the business that there would have been 10 years ago.
I would add, and vice versa.
Okay, any other questions? There's a question there.
Yes. Thank you to our multitasking photographer.
Thank you. You mentioned the thematics, and I was wondering of the importance of investing in space in Europe. And before I get an answer, I'd like to shamelessly invite everybody to a panel we're organizing tomorrow on space investing at 11:30, demo room 0, that is close by. But what is the importance of space, especially when we look at the transatlantic alliance? Thank you very much.
Thank you for the question, also for the invitation. Actually, this is an excellent question indeed, because something is happening in the space industry very clearly. And I must say that we have been, modestly, but contributing to this quite recently by, let's say, partnering actually through the chain from startups to investors, and with the help, which is very important in this sector, with the help of national and European space agency. So ESA, but also the French CNES, the national other agencies, and EU SPA in particular. Why is that so important? First of all, because in space, in the space-related industry, you have a lot of technology that are connects to other technologies developed in the other sector. So whatever we talked before are connected to space nowadays. And second, there's a particular dynamics indeed. I mean, we talk a lot about the downstream, versus the upstreams. Actually, the two now are extremely well connected and form probably quite a unique ecosystem from that point of view. The first meeting that were organized recently with actually on Monday in Paris were extremely successful. A lot of participants, many pitches around, and so on. So I'm quite optimistic that a lot of money that will be put also into this. You probably heard about this Cassini program promoted by Thierry Breton, the commissioner, and this will be followed by other programs to supporting also the European space, for which I would like to mention that ESA, the European Space Agency, is Europe, but also UK.
Okay, thank you very much. We will leave it there. Thank you, George. Thank you, Alan, and thank you to our audience as well.